Hi everyone. In this video I'd like to introduce you the concept for a LIFO reserve. LIFO reserve is used when we are trying to compare companies that are using FIFO versus the companies that are using LIFO. As we've seen in the previous videos, different inventory valuation methods are going to give us different results. In order to make apples to apples comparison, we need to convert companies that are using LIFO to FIFO, so we have a fair base of comparison. And the tool for that is called LIFO reserve. The way we calculate LIFO reserve practically is ending value inventory value under FIFO minus ending inventory value under LIFO. So in this case, LIFO reserve turns out to be 28,000 minus the 23,000. So that's a LIFO reserve. There is also a concept called change in LIFO reserve in a particular year, and we are going to define that as cost of goods sold under LIFO minus cost of goods sold under FIFO. So in this particular case, change in LIFO reserve is going to be equal to the difference between the cost of goods sold between LIFO and FIFO. So 102,000 minus the 97,000 is going to give us the change in LIFO reserve, which is the same as the LIFO reserve. So the change in LIFO reserve and LIFO reserve are the same, and the reason for that is the company is beginning operations just this year. So beginning LIFO reserve for the company was 0. Change in LIFO reserve is $5,000. Ending LIFO reserve is the sum of the two. So that's why we are seeing ending LIFO reserve being equal to the change in LIFO reserve, just because we just started the operations this year. In the next video, I'm going to continue showing you what happens in the following year, where we are going to keep adding new items to the inventory, and we are going to look at the changes in LIFO reserve and calculate the ending LIFO reserve.